Good evening and welcome to this session of the live virtual coaching classes of the Board of Studies of the Institute of Chartered Accountants of India. It's indeed a pleasure to be here with all of you and nice to see some of you greeting me on the query pad. And so often we have Mr. Mohanta. And welcome back, sir. And I'm very happy to know that you are fine now and wishing you all the very best and look forward to a nice interaction with you. We have Yogita ji from Yogita ji. We have Hitesh, of course. Hitesh Jain is here. And Jayendra. Welcome to all of you. And let's sort of start on the, and well, of course, those others who are tuned in are going to hear later. Welcome to all of you for this session. As usual, I will be using a PowerPoint presentation. But before we go in, for those of you who are, sort of the first time, taking up company law as a subject, let me assure you that though it's somewhat theoretical, though it seems to be a little boring, because a lot of theoretical stuff, if you are a person who likes to compute, if you are a person who likes to do accounting and casting and all that, then maybe you will find that this may sound a little boring, not necessarily. It's a beautiful subject. I'll hope to sort of introduce you to this wonderful topic called company law and other laws in course of time. And let's hope we have a great learning experience. Without much ado, let me get into the PowerPoint presentation and so that we can start the sessions, right? Now, this being my first session, I thought I could as well sort of introduce you to certain aspects of company law before I start the topic for the evening, which is incorporation of company and matters incidental thereto. Incidental means connected with it. Anything which is connected is incidental. It happens because of this. So when you incorporate a company, there are other things that you have to do, etc., etc. So that is covered in this chapter 2 of the Institute study material, which we will do today, right? Regarding queries, I'm going to give you my views now quickly before I get into the class. Now, when you ask me a query, remember, the class has a sequence. The class I'm conducting has a sequence of concepts that has to go on. So, if there is a question that's not connected to the sequence of what I'm teaching today, no problem. I will answer it, but 100% not during the session. At the end of the session, maybe about 5 minutes before I close, I'll take up those queries. For example, we have Ms. Madhuri Nikhare, who sort of who has a doubt on definition, okay, on subsidiary of and public holding and all that. Sorry, not no, G, but yes, later. Maybe before I close the class, I'll come back to your query. Right now, concentrate on what I'm going to talk to you about incorporation of companies. More importantly, some basics before you go into the topic. See, don't get caught in the details. Understand the principles first. And then the details will automatically fall in place. Many times I find student queries are not because they have not studied, but because they are studying too much. I repeat, students have queries and problems and queries not because they are studying less, but because they are studying more. Not necessary. Understand the basic principles, which are very few. Agreed. The earlier law had 600 odd sections. Now it's reduced and we still have 470 sections and 7 schedules. But the basic principles are very few. Once you understand the basic concepts, the details are easy to learn. Okay. But of course, I'm not saying the details are not important. I'm saying don't get bogged down in the details. Okay. Because broader principles will help you to get along even if you're not very comfortable with the details. But if you don't know the principles involved, the basic principles, then, just mugging up from the institute material may not be, or any book may not be a wonderful idea. So in the lectures that follow, my lectures as I may say, so I've arranged the material in such a way that you will be able to remember the details with ease. So my PowerPoint presentations are sort of arranging the content. So some of it will be from the material, no doubt, but arranged differently. I'm following the Institute material throughout most of the time. I'll be following the Institute material. Some places I've added my own content, but then in line with the Institute material, right? Wow. Here we come to the important principle of company law. My dear friends, as we go into this topic, incorporation of companies, we will see this impact is there. Company law is meant to enable two important purposes. From time immemorial, right? In 1600 AD, the first ever joint stock company was formed. Of course, the British East India Company, which was shortly followed in 1604 by the Dutch East India Company. Right from then, company law, the core of it was meant to do two things. One, to protect the investor, means the shareholder, the owner, to protect him. Why? Because for the first time, we are permitting there is a division, there is a separation between owner and management. In reality, they may be the same, friends. In reality, they may be the same. But theoretically, company law permits the owner to be totally different from the management. If that is so, then the owners, the investors need to be protected from the management, the so-called directors of the company. Therefore, many things that need to be done will require the approval of the shareholders. Later on, when we come to management and administration, we will talk in depth about meetings of companies, resolutions and all that. But basically, this is one important protection that the company law gives. Directors cannot take their own decisions. They need to approach the shareholders whenever they want to take a major decision. This is one of the pillars called protection of the investor. By the same token, we also want to protect the creditors. Very importantly, because there will be some degree of, you see, the creditors are going to lend money to the company. They are not going to lend money to the shareholders or to the directors. So ultimately, who will have to repay? It is the company. Whose assets can be attached? Only the companies. Therefore, creditors need to be given a lot of protection. We will be seeing all this in the course of these lectures. For example, in prospectus, share capital, even in incorporation, we will see protection of the investor. When we come to charges, acceptance of deposits, debentures, you will see protection of the creditors. How the law sort of forces shareholders to, the company to provide information to the shareholders. Decisions cannot be taken unless the shareholders give their consent. Sometimes things just cannot be done. We'll see all that. But why I'm making this point in the beginning of this lecture is because later, whenever we look at a provision of the Companies Act, please ask yourself, is the law protecting the investor or is the law protecting the creditor? How is the law trying to protect the investor? How is the law trying to protect the creditor? So even if the section has a slightly confusing wording, if you hold on to this concept, we will go to the right conclusion and say, hey, this is what the section should mean. And therefore, this is what I will conclude, right? So this is something that you might want to keep in mind. Lastly, of recent times, since, shall we say, the 80s, the word public interest also has been added to the concept of protection of investor and creditor. Public interest is everybody, society at large. Definitely, large companies have impact upon the national economy, on consumers, on vendors, right, on employees. Therefore, public interest also needs to be kept in mind, which is sort of when the government wants to do something, they will have to justify it by saying it is in public interest, right? Otherwise, they cannot do it. Because just because somebody doesn't like you, he can't do anything. He's a government servant. He has to show that what he's doing is in public interest, right? More about it later. Today, we are going to talk about incorporation of a company. Incorporation of a company, right? I'm doing my best to raise my voice. I hope my voice is now audible. These are all small things. My humble request is to bear with you. Don't put a message in the query box. Talk to if you have a problem with network, talk to the help desk. Don't put a message in the query because it only disturbs the class. Because it might be a localized problem for you. In which case, just check your own connectivity. Voice-wise, I will definitely try. I'm doing my best to increase it. In case my voice is not very audible, there's a tech person sitting there who will immediately warn me and I will be alerted. So please don't put a message in the query box. Also see that your bandwidth is strong. Ensure that there is also there. Just since somebody is talking about voice, kindly confirm that my voice is now better than what it was, say, 5 minutes ago. Okay. See, okay. Let me complete all this. Alok Kumar Chaudhary wants to ask me, will you upload this note? 100% I will, but not today. At the last class, there will be 4 sessions of this topic. When the last session is over, I will upload it. For reasons I am clear about. Okay. If in the meantime you want to prepare this topic, don't worry, read the institute material. My notes will come to you at the end of the 4th session. Okay. There are a lot of people who don't attend my classes at this stage. They listen to my lectures later and then they download the material. So it's not as if it has to be in your hand today. Nothing is going to happen today. What you need these notes for preparing nearer the exam date, by which time it will come to you. Don't worry. Today what you need to do is just listen to my lecture. Look at the screen. Try to internalize the knowledge as I am teaching you. Right? So you know all this possibly from your commerce graduation itself. A company is a separate legal entity. What does it mean? It is a separate legal entity, means it can hold property in its own name. It can file a suit in its own name. It can defend a suit. When somebody is filing a case in the court, it will be not against the shareholders or the directors, but against the company, because it's a separate legal entity. And it has perpetual succession, means companies cannot die just because all the shareholders die. A partnership comes to an end if all the partners die. Sole proprietary comes to an end when the sole proprietor dies. But company will not come to an end because shareholders die. Because their legal heirs will take over, that's all. Automatically, their legal heirs will step into their shoes. But the company as a separate legal entity will continue. A company is a legal person. You and I are natural persons. We were created by a process of biology. Am I correct? Whereas company was created by a process of law. Right? Which is what we are going to study today. That process of law by which a company is brought into existence is the topic for the day and the following sessions. The process of law by which a company is brought into existence is called incorporation. The process of law by which a company is brought into existence. Before incorporation, company was not there. Once the registrar of companies, the Ministry of Corporate Affairs, says the company is incorporated and issues the certificate of incorporation, from that day onwards, the company is coming into existence. This process is called incorporation. Corporeal means to give substance and form. Corporeal, having substance and form. Incorporation means to give substance and form. Right? So we give substance and form to an entity through incorporation. Initially, the company is existing only in the mind of a few persons. They are called promoters. They have a project or they have an idea for a business. It's in their mind. They want to carry on this business as a company. What was in their mind, what is first conceived in their mind, will then have to become a company. Just last month, sort of April, May, a person came to me from southern part of Tamil Nadu And he said, I'm going to be a builder. Kindly form a company for me. Agreed. So the process started. First, we'll see that later. I'll explain to you. Then I told him at that time that within such and such a time, I'll have your company in existence. So it so happened today that that company was incorporated. The certificate of incorporation was downloaded from the Ministry Ka website and I handed it over to him today. Today, my office, a new company was born. A builder and developer, a construction company was born. Okay. So how it happens, the legal process by which it happens, I will describe to you in the lecture that will follow. Right? Just give me a heads up or give me a confirmation, Mantanjali, that my voice is now better than what it was before. So we said the idea of a company is first conceived in the mind of the promoter. See, the gentleman who came from the place called Tirunelveli, he is a promoter. Then the company was only in the mind of this gentleman. He is a promoter. In case the company is going for a public issue, the company will issue something called a prospectus, an invitation to subscribe for the shares. We'll see in more detail in the next topic. What is a prospectus, etc., etc. Right now, what you need to understand is the word promoter is very important when the public are involved. So when public means unconnected people are asked to give money for purchasing shares, then there is more control. Okay, here we go. One of the pillars. Yes, the law is very particular about protecting the investor. Now, so they've given a lot of responsibility for the promoters. So they've in fact defined the promoter into subsection 69. In fact, earlier law, if I may be permitted, did not define promoter. Now, the word promoter is defined into subsection 69, definition B. So this guy is named in the prospectus or is identified by the company in the annual return. See, in the annual return, when they're asking who are the promoters. For example, sometimes in a large group like Birla or Tata group, the group may promote a company. A new company will be formed by the group, in which case the promoter will be Tata Group. Who is the promoter? Tata Group. Right. So such possibility is also there. The promoter has control over the affairs of the company, directly or indirectly, whether as a shareholder, director, or otherwise. The word otherwise is very important. If you find the word otherwise in a section or in a definition, be very, very careful, because this closes the loop. Any other method of controlling the affairs of a company covered by otherwise. Any other method. You're using the language of set theory, right? The total universe is there. Within that, I'm identifying shareholder, director. Then I'm saying otherwise. Otherwise means remaining part of the universe. If I'm using the language of set theory, there is a universe, right? Universal set. Everything else is covered. I've identified two subsets called shareholder, director, and then otherwise. Otherwise is very powerful. If you see otherwise in the section, be alerted. It's very difficult to circumvent that section, right? Now, more about it when I come to more otherwise words in the Act. Now, this promoter is a person in accordance with whose advice, directions, or instructions the board of directors of the company is accustomed to act. Now, this guy is not a shareholder, this guy is not a director, but the board of directors of the company is acting per his directions or instructions. So, who is he? He is the promoter, right? This is definition of promoter. Now, a person who is only acting in a professional capacity is not a promoter. For example, a solicitor means an advocate. Solicitor is an advocate. Banker, of course, you know. Accountant, you and I, chartered accountants. For example, this builder and developer company that I formed today, I formed it. I helped the company I helped him in the formation, but I acted merely in a professional capacity. Therefore, I am not a promoter. Whereas the gentleman who approached me with the idea of forming a company, he is a promoter, right? We will talk more about promoters when we come to the next chapter. That is prospectus. But right now, just remember. Maybe I might even revisit the definition once more when we come there. Now we come to types of companies. Quickly. Basically, you have the broad category. I'm sure you are by now quite familiar. We have private, which includes an OPC. क्या है OPC? One person company. एक ही आदमी है इसमें. One person company. Okay. Very unique thing which was introduced in the Companies Act 2013. You can say it's a kind of a innovation in the Companies Act, where a single person can form a company. We're going to see more about it shortly, right? So private, a one-person company is coming under the category of a private company. Then you have a public company. I shall presume that you already studied it in definitions. The words private and public are defined in the definitions. Private company, public company, etc. A public company is one which is not a private company, because private company is defined as you know. Again, both private or public may be, even a OPC may be limited by shares or limited by guarantee or unlimited. What do you mean by limited by shares? Now, friends, are you ready for a question? Correct. Mantanjali is correct. OPC is one-person company. Are you now? Sharpen your wits. ABC Limited has issued shares. ABC Limited has issued shares. Each share is 10 rupees fully paid up. Each share is 10 rupees fully paid up. What is the liability of a shareholder of ABC Limited? ABC Limited has issued shares. Each share is face value 10 rupees fully paid up. What is the liability of the shareholder of ABC Limited? Yeah. Any answers? 10 rupees fully paid up. What is the liability of a shareholder? Okay, there's a lag. We'll come to it later. Okay. The liability of the members of a company is limited. How is it limited? It's either limited by shares, or it is limited by guarantee, or it could be unlimited. When it is limited by guarantee, it means thank you. Beautiful. We have Ankur Patel saying no liability. We have Sakshi Balkawade saying up to the face value of the shares. We have Tanishka Batra saying 0. Most of you seem to like the 10 rupee. See, the liability is the amount unpaid, says Shrestha. Agreed. What is the amount unpaid here? That is the answer. See, if it is a fully paid shares, my dear friend, the liability is 0. It's a point of principle. Try to remember this. Those of you who answered 10 rupees, remember, 10 rupees is already paid. What do you mean by limited liability? It means the liability of the members of a company is limited to the amount, if any, unpaid on the shares. Such a company is called limited by shares, where the liability is restricted to the amount, if any, unpaid on the shares. In this case, there is no unpaid amount, fully paid. So, as many of you have told, the correct answer is 0 liability. This is a company limited by shares. Nil, yes, it is limited by shares. On the other hand, a company which is limited by guarantee will be the liability of a shareholder is limited to the amount he has agreed to pay in the event of winding up. See, they give a guarantee. He gives an undertaking that in case the company is wound up, he will contribute to the debts to an extent. That amount is the limitation of his liability. The guarantee amount given by him is the limitation. When the company is wound up, only it will come. As of now, it won't be there. As of now, the company will possibly, usually companies limited by guarantee are also not-for-profit companies. We'll see that in section 8. Many of these not-for-profit companies are also limited by guarantee. Okay, because they will get some donations and all that. They don't need. But the people who promote it will say, in case the company is wound up, I will contribute 50,000. At that point, he doesn't have to give any money. But in case the company is wound up and there is a debt and the company is not able to pay, the difference amount will have to be contributed by these people up to the limit of amount guaranteed by them. Then, of course, you have the unlimited. Means what? Where the liability of the shareholder is unlimited. Now, why would you want to do this? Because in many cases, firm, the normal firm, partnership firm, can be wound up under the Companies Act. So we might simply want to come here and become an unlimited company. To my knowledge, there are no unlimited liability companies. Though the provision is there in the Act, I have not heard of an unlimited liability company. Okay, I have not heard of it. In case you have, I would love to know about it. But I have not heard of an unlimited liability company. Right? So, a company limited by guarantee may also have capital, means shares. Or it may have no capital. Similarly, unlimited company may also have capital or no capital. Right? Now, beautiful. Thank you for so enthusiastically answering the question. A lot of you have answered the correct amount. See, just add to this now. The shareholders' liability is of the amount, if any, unpaid. Just add that if any. Because in some cases, there may be no amount unpaid, like in our example. Okay. Now, let's go to one more question, which is somebody was asking whether a promoter may later on become a director. Yeah, he will. Why not? He can become director. But not necessarily. But he can. At the time of prospectus, he may be mentioned as a promoter. Once the company is formed, he might become a director. Yes. Promoter can be a director later on, 100%. Why not? Okay. Good show. Some questions I am reserving it for later. Because they are not directly connected with the topic I am discussing. Similarly, you have public company, which does not have the 4 items in the articles. A private company will limit the number of its members, restrict the transfer of shares, prohibit the issue of any prospectus. So these things are done by a private company. Should not be done by a private company. These items will not be present in the articles of a public company. In the current Companies Act 2013, there is not much difference between a private company and a public company in terms of compliance. Earlier, private companies were exempted from many of the sections, whereas in the new law, private companies are not having so many exemptions. Many of the major provisions have been made applicable to private also with very, very limited exemptions. It's not as if all private companies are totally exempted. So, but still we have this category of private company and public company. Very important point. If a company wants to issue shares to the public, it has to be a public company. By definition now, a private company is prohibited from issuing a prospectus, for subscription of any shares in or debentures of the company. Therefore, if you want to become a listed company, you will have to become a public company. I'm repeating, a private company cannot be a listed company. Got it? Beautiful. So, Ms. Kiran says, shareholders have no liability but the company has liability towards its shareholders. No, company has no liability towards shareholders except repayment of the capital. Is that what you mean? I think at the time of winding up, yes, the company will have to repay the capital. Absolutely. If that's what you mean, excellent. Beautiful. Promoter is not a key managerial person. To answer your question straight, Mr. Garg, promoter is not a KMP. Now, Mr. Garg, instead of asking me this question, why don't you refer to the definition of key managerial person? It is readily available. What do you say? Okay, he is not a KMP. Promoter is not a KMP. I've answered your question. Okay, no problem. We have somebody, Jayendra is saying, private company is one who have restriction on transfer of share prohibited. Yes, exactly. Beautiful, sir. Wow, so happy. Knowledge level is very high. Good. Jayendra ji, you may want to revisit your comment. Liabilities of the shareholders will always equal to the amount of capital is contributing. No, liability is different from capital. Amount already contributed is not liability. Now, he need not do it. Now, what he has to see, if I agree to give you 10 rupees and I gave you 10 rupees, what is my liability? Suppose I agreed to give you 10 rupees, but I gave you only 5 rupees, partly paid. The remaining 5 rupees is my liability. So much? Thank you. Just confirm that you have understood, sir. See, listed company won't be discussed now. It will be done later. Don't worry. When you come to final examination, you will study at that time. Don't worry about that. Right now, we will not talk. It's a huge topic. Okay. We are following the Institute ka material. I was merely giving you one information because I found many students make this mistake. I keep on asking me this question. Can a private company be listed? Can a private company be listed? Never. If you want to get yourself listed, you have to become a public company. That's all I wanted to point out here. Okay. Yeah, you can see what I suggest now. It's a query pad. Keep on asking questions. No problem. From chapter 1 also you can ask. No problem. But I may not answer it now. That's all I'm again and again saying. Because if I do that, the flow of my lecture will be affected. That is why I will not do it. Okay. But later I will answer questions from that topic also. Right, sir? Formation of a company is contained in section 3. See, one more thing I'll tell you. Our Institute ka material follows the chapters of the Companies Act. I don't know how many of you know this. The Companies Act 2013, if you want to refer, you can visit the Ministry of Corporate Affairs, mca.gov.in. mca.gov.in. I'll show you that also. Therein you will find the actual sections are there. Our Institute ka material, it follows that pattern. Okay. So wherever possible, they follow the sequence of the sections. So we go to the section. You already saw section 2. 1 and 2 definitions over. Now we come to section 3. Swati ji, yes, only public company can be listed on stock exchange. The minimum number of persons mentioned below may form a company for any lawful purpose by subscribing their names or his name to a memorandum of association. It's called memorandum of association and complying with the requirements of this act in respect of registration. So if you want to form a public company, you need 7 or more persons. If you want to form a private company, 2 or more persons. 1 person company, 1 person. Okay. Good. I'm just reading a question by Ankur Patel. Very interesting question. See, private company is a subsidiary of a public company. A private company which is a subsidiary of a public company is a public company. Agreed. Agreed. Okay. Then, yeah, once it is a public company, it has all the rights, etc., etc. See, once that happens now, it has to amend its articles and it has to remove that prohibition and all. Yeah, thereafter it can. It can answer your question. Minimum paid up share capital in a private company is 50 lakhs. No, sir. No. We'll come to that later. Mukta, yes, maybe you do a little research on your own about this minimum paid up share capital. Because minimum paid up share capital is not 50 lakhs now, 2 crores now. No. Okay. Is there any difference between member and shareholder? Very good question. Himanshu Gupta is asking. Sir, these two terms actually have a difference. There's a very, very theoretical difference. But unfortunately, in the Companies Act 2013, they are using them synonymously. They don't give a big thing. So, they are similar words with small difference. Okay. Point is, member is defined. The word member is defined. Check it out. The word shareholder is not defined anywhere. But shareholder is the common term we use. Kya hai difference? Member is a person who applies in writing to become a member and whose name is entered in the register of members. A member is a person who applies in writing to become a member and whose name is entered in the register of members or updated in the records of a depository. If it's a dematerialized share, obviously he'll be updated in the records of a depository. This is the definition of member, sir. Check it out. Whereas shareholder, there is no definition. But a person who is holding shares is a shareholder. So it is quite possible that there could be a case where a person's name is entered in the register of members, means he is a member, but he would have sold his shares. Then he will not be he will not be a shareholder. Similarly, a guy could have purchased the shares, but his name is not entered in the register of members. So he will be a shareholder, but not a member. So the point is, to become a member, the person's name should be entered in the register of members. All right? He applies in writing to become a member and his name is entered in the register of members. If that is satisfied, member. So be careful when you're using these two words. But the 2013 Act, no shame, they will use the word synonymously. I'm sorry to say this. They use it. Whereas the old law, strictly they will use only member. But here, casually they will use the word shareholder. Therefore, though this theoretical difference is there, my dear friend, given the nature of the Ministry of Corporate Affairs and its ability to draft, I have to tell you that these two words are now synonymous. So the ministry is using them synonymously. Because where they use the word shareholder, actually the meaning is member. They use it. And they have also defined member in the Act. Okay. So welcome to the world of the Ministry of Corporate Affairs, but that's how it is. So don't worry. But in the exam, be a little careful. Try to avoid using the word shareholder. Prefer to use the word member. My humble suggestion to you. Okay. Good questions are being asked. Excellent. Subscribing names means I will show you that document. In the memorandum, they will agree to take the shares. There is one space where in those days they used to actually sign. Today we affix the digital signature of the person. We affix the digital signature online. But above that they will say, we the undersigned agree to take up the shares respectively mentioned against our name. This is called subscription. Later on, when we come to memorandum, parts of the memorandum of association, we will talk about subscription clause. I will show you. This is the part where they agree to take shares. That's called subscribing. Okay. Got it? To my knowledge, minimum paid up capital of a private company is 1 lakh. Minimum paid up capital of a public company is 5 lakhs. As I have understood it. Correct me if I am wrong. See, nobody has the monopoly on knowledge, I believe. I learn every day, continuously learning. Okay. Good question from Swati. Let's see some more questions. Subscribing, I have answered. Boss, don't jump the gun, Swati. You are highly knowledgeable on OPC, but allow me to come to OPC topic, then I will tell more about nominee and all that. Okay? Don't jump the gun. The restriction of transferring shares will be broken if private company is going to be listed. How it can be listed? It has to become a public company. Then how it can be? Don't argue like this, ma. Jaspreet Kaur, don't argue like this. If a private company becomes a subsidiary of a public company, it has to immediately amend its articles and remove that prohibition and all that. Then there is no restriction on transfer of shares. Got it? Then it can do all that. No problem. Got it? Not convert itself. What do you mean is that particular clause in the articles has to be amended. Yeah. If you mean by conversion, yes. It has to remove that clause in the articles. Then only it can go for a listing and all. 100%. Can public company become subsidiary of private company? Why not? Okay, it is already there. There are many cases where public company is a subsidiary. Even public company can be a subsidiary of a private company. In which case, public company will continue to be a public company. Public company will not become private company. Public company continue to be a private. In fact, the other way around is possible. But in your syllabus, it is not there. In another place, it is there. Where if a public company is a subsidiary of a private company, that private company will get affected. Okay. But public company won't get affected. Public company continue to be a public company, even though it is a subsidiary of a private company. Good question. Why don't we wait a little bit before we'll be seeing this private public topic later. At the time, I'll tell you more. Okay, can a subsidiary company of a private change to public? Why not? Anything can be done, madam. That is, a private company is having a subsidiary, which is a private company that wants to change to public. Change. There is a procedure for that. I will show you. When we come to amendment to the memorandum, I will talk about it. You do that. Go through that procedure. Do it. Nothing wrong. You can do it. Minimum paid up share capital of private companies 1 lakh. I already told you. Okay. Member may not be shareholder because he may not pay share value. No. That is not the reason. When you buy a share in the open market, in the stock market, at that point in time, your name may not be entered in the register of members. It will take another 15 to 20 days. The depository has to inform the company, then the company has to. But then the minute your name is uploaded in the records of the depository, you are automatically a member. Right, sir? There could be a small point in time when your name is not entered there, but you have purchased the share. For that interim period, you will be a shareholder but not a member. Okay, thank you, Ms. Pooja. Thank you very much. All members are shareholders, but not exactly. Some members may not be shareholders. Some shareholders may not be members. Not all. Don't put all there. All is dangerous. Some members whose name is in the register of members but who have sold the share will not be shareholders. Some shareholders who have purchased the share whose name is not entered in the register of members are not members but they are shareholders. So there will be an intersection there, big intersection, where both member and share. That intersection is pretty big. So most of the time member shareholder will be coinciding. No. I will not say every shareholder is a member, but not every member is a shareholder. Some members may not be shareholders, some shareholders may not be members. So it's like an intersection of two sets. The intersecting area is pretty big. The non-intersecting area will be a small slice on the end. But that will be there. Some people will be member but not shareholder. Some people will be shareholder but not member. This is a beautiful exercise in logic. What you should do, if you have a paper and pen, you should use set theory for this. You draw one circle, then you draw another circle overlapping. Then first circle is member, second circle is shareholder. Intersecting area, both member and shareholder. Non-intersecting area, only member, only shareholder. But in reality, that intersecting area will be huge. It will be very huge. Okay. Yeah. See, you are jumping the gun. How a member will leave the company and all that comes later. Okay, we'll talk about it at that time. OPC, we will talk about it when I come there, right? This is a very interesting section, standalone section. See, when will the members become personally liable? One of the important, shall we say, sacred cow of Companies Act is the company's separate legal entity. Members' liability is limited. For the debts of the company, you cannot sue the member. For the amount due by the company, you cannot file a suit or a case against the members or shareholders if you so desire. But in one extraordinary situation, the members can be made personally liable and that too severally liable, individually liable. How? 3 conditions have to be fulfilled. 3 conditions have to be fulfilled. First, the number of members shall fall below the statutory minimum. That is, sorry. Right. This is the statutory minimum, right? So, the number of members shall fall below the statutory minimum. That is to say, less than 2 in the case of private company, less than 7 in the case of public company. Hello, don't say less than 1 for OPC. That is illogical. That man dies, OPC gone, closed. It will become wound up, that's all. The OPC will be wound up, that's all. The nominee will take over and he will run. We'll see that later, right? Either the OPC will be wound up or the nominee will take over. That one man will be there, don't do it. Okay? So don't bring OPC into this. Whereas, if the number of members of a public company falls below 7 or a private company falls below 2, so the number of members shall fall below the statutory minimum. The company should carry on business for more than 6 months after the number is so reduced. So, on a particular day, the number of members got reduced below 7. It became 5. Thereafter, for 6 months, the company carried on business. Right? Now, those remaining 5 members who are carrying on, the remaining members should be cognizant. Cognizant means aware. Mentally aware, cognizant. Okay? Cogito ergo sum, said Descartes. Cogito ergo sum. I think, therefore I am. I cogitate, therefore I am. To be cognizant is to be aware. Okay? So, awareness is called cognizance. So, the remaining members should be aware. They should be knowing that the number is reduced below the statutory minimum. Knowingly, they should carry on the business beyond 6 months. Then what happens? The remaining members shall be severally. Severally is a word you should have studied in Partnership Act also. The partners of a firm are jointly and severally liable for the debts of the firm. What do you mean by severally? Jointly, you know, they are all together liable. Severally means any one partner can be sued for the entire amount. Suppose I am a creditor of a firm, the firm owes me 8 lakhs. There are 3 partners. I need not file a joint suit. I can file a suit against one of the partners for the entire 8 lakhs. That is called severally liable. Same word is used here. On who? The remaining members. Means, in our example, the remaining 5 bakras who are continuing to run the business for 6 months, beyond 6 months, for more than 6 months, they have run the business with a reduced number knowingly. These fellows shall be severally liable for the payment of the whole debts of the company contracted during the time it carries on business after those 6 months and may be severally sued therefore. Means any one of those 5 fellows can be sued by the creditor, but only in respect of debts contracted or incurred or borrowed during the time it carries on business after 6 months. So sequence. Number falls below the statutory minimum. Business is carried on. 6 months ho gaya. After 6 months, still the number is reduced. The remaining members knowingly carry on business beyond that. Then the remaining members are severally liable for the payment of the whole debts of the company which is contracted or which is borrowed after those 6 months. And they are liable severally. Any one of them can be sued for the entire amount. That's what severally means. Severally means any one person can be sued for the entire amount. Okay. Good. So this is a very interesting section, 3A. It's also an example of lifting of the corporate wheel. Normally, the members are different from the company is a very, very powerful dictum laid down in a very famous case, which our institute syllabus doesn't have. Maybe they feel you would have studied it in, you would already studied it in CPT or in BCom. Therefore, they're not pressing it on you. So it's called Solomon versus Solomon and Company Limited. Solomon versus Solomon and Company Limited. So that there the law is laid down that company is different from member. For the debts of the company, member cannot be sued. This is an important exception to that rule. Section 3A is one of the statutory exceptions to that rule. One more thing, suppose there are 5 members and the amount of debt incurred after 6 months comes to 1 crore. One of them is sued. Let us say Mr. E is sued for the entire 1 crore and he pays it also. Now, can he collect it from the remaining guys? Yes, he can. 1/5, 1/5, 1/5, 4 into 1/5, 4/5. He can sue the other guys and collect. Definitely. But once he is sued, he has to pay fully. Then he can sue the others and collect it. But severally means the creditor can sue any one of them for the entire amount. That is what severally means. Okay. If the business is carried on unknowingly, then the remaining members are not liable. But how will you prove it that it was unknowingly done? Are you able to understand? You are asking a question, Hitesh ji, which is good, correct. Because the section says knowingly. Members should be cognizant. So if it is unknowing, they are not liable. That's an obvious conclusion. But the practical problem is how will you prove that you did it unknowingly, Baba? For example, private limited company, 2 people, ma. Only 1 person is there. Knowingly, unknowingly, how you carried on the business? I mean, practically. Okay. But theoretically, yes. Unknowingly, if you say, yes, but then prove it. That is the problem. Okay, beautiful. Now, we come to the various steps for incorporation of a company. Various steps for incorporation of company. This is contained in section 7. Earlier, all this was done by way of paperwork. I started my CA practice. I qualified Chartered Accounting examination in 1987. When I was 21 years old when I qualified as a Chartered Accountant. Then I worked in a firm called Price Waterhouse for about 3 years as an audit manager. Then I started my own practice, and in those days, there was no company secretary in practice. The company secretary in practice concept itself had not come. And so we, Chartered Accountants, only used to incorporate companies. So I used to incorporate a lot of companies. So much so that around 2005 or 6, the record of my number of companies incorporated, somebody came and told me in my office that I have incorporated 1,500 companies. Or rather, our firm had incorporated 1,500. The magic number was reached. Then this company secretary in practice came, and then we started giving them the opportunity, so they went off. But still, why am I telling all this? It is important for you as a member of our institute, if you're going to practice or even if you're going to be in service, to be familiar with the procedure or basic law relating to incorporation. As a chartered accountant, you cannot say, I don't know. Because sometimes, the client will come to you first. He may not go to a company secretary. They will come to you first and they will ask you for suggestions and all that. Then you may do the incorporation yourself, or you may ask them to meet a company secretary to do it for them. It's important for you and me to know it. In those days, I used to do it manually, the 1980s, remember, 1993, 92, 91, 92. The computers had just come. But everybody couldn't own a computer. Printers were rare. And the two quality typesetting, word processing software, we had no access. So we had only letterpress printers. The LaserJet printer was a luxury. So I used to go to a desktop publishing house, and I used to give them the content. Then we will do proofreading. It was all done. And then we will prepare the memorandum. So I'll tell you about it. Vishal Agarwal ji, I will not be uploading the notes till the last class. Suniye na? It will not be uploaded till the last class. At the end of that, it will be uploaded and it will be available to you. Okay? Got it? Okay, there's a question on 3A. Let's take that before we go to 7. Does section, who's asking it? Shrest. Does section 3A mean the members are liable for debts incurred between 6 months, or are they liable for the debts only incurred after 6 months? You tell me after reading this. You tell me. I have put this slide up for you. It was there. You tell me. After those 6 months, the remaining members shall be severally liable for the payment of the whole debts of the company contracted during the time it carries on business after those 6 months. So 6 months ka baad, next day onwards, which is why, accounting becomes very important. You should see what was the debt as on the last day of the 6 month. Then next day. Then the debts which are incurred subsequently will have to be accumulated. Only those debts may be sued, not the debts incurred before 6 months, between 6 months or whatever. Not the debts incurred between reduction in number and 6 months. If that was your question, yes. One more thing. This being a very, very, online session where, unlike a Zoom session, I cannot even ask you to talk. You cannot unmute and speak. This is in a YouTube mode. Therefore, once your question is answered and you had the answer, you are satisfied, just give a feedback, say, I got the answer or something like that, will make me feel comfortable, right? Good, nice. Enjoying law, beautiful. Jayendran, I'm so happy. Enjoy, that's important. Don't copy. Mamtaji, don't copy. Don't write anything from the slides. Just listen to me. Aram se suniye. Don't write. It will come to you. Don't worry. Nothing is going to happen the next, say, 1 week. Sky is not going to fall on your head there. If in the meantime you want to revise what I am teaching today, hey Baba, it's there in the institute ka material mein hai. So you just go there and you see it. Nothing will happen. See, students sometimes, are so tense. Sir, will you give notes, sir? Sir. Hey, you got a lot of time here. Don't worry. Aram se. Just listen to me. Concentrate. See, in our ancient Indian wisdom, they say Shravan, Manan, then only Nityatyasam. Shravan. First is listen to the teacher. Then Manan. Manan comes later. Manana. That comes later. You read the material and you remember. Try to memorize. Comes later. Okay, don't worry about that. Right now, just listen. Anyway, if you still want to take some quick notes, see, there may be something that I'm saying which is not there in the slide, which is more of an aside. Make a note of that. Some thoughts may come to you. Make a note of that, etc. Okay? Beautiful. So don't write down all the stuff here. Come on. Upon God, I swear, this will come to you. I will upload it, but not now. Why, I may make some changes here. One of you may ask me a question. I will make a change. I may add 1 or 2 more points to it. That is why. I want to make the slides a living document. You and I will together co-create it. Suppose I'm in the light of a comment given by a student, I'm making a change in this. I want that to survive. And then only that will be uploaded. This is my logic. Everywhere I'm saying now, don't go by the rule book. Go by the principle. What is Srikanth trying to tell here? He wants to add value. That is why he's saying, allow me to upload it at the end of the last session. Got it? It will be there. Don't worry. In fact, many students download this material 3 months, 4 months after the lecture, actual date of the lecture. And sometimes they send a message saying, sir, it is not there and all that. I don't know. That's not my problem. It's up to the institute. You have to go to the BOS website and download it. So don't worry. Yeah, take screenshots if you want. But believe me, it's going to come to you in PDF format. You're going to use it. Don't worry. Okay. Yes. Yeah. We'll move on. So these are the steps for incorporation of a company. Reservation of name. by filing an e-application. Okay. When I was conceived, in the sense when I was in my mother's womb in 1966, 65. Okay. 66, I was born. January, May, I was born. So 65, I must have been in my mother's womb. My father and mother did not apply to the Ministry of Child Affairs and say, we are going to have a son or daughter, as the case may be. In case we have a son, we want to call him Srikant. In case we have a daughter, blah. Now, they didn't get approval and things like that. Okay. So, whatever name they wanted to give, they gave. So, in fact, my name is Srikant, but actually my mother wanted to call me Rajnikant. Can you imagine? My mother wanted to call me, my mother wanted to call me Rajnikant. And I'm sure you understand the meaning of that word, term. What a superstar. But my father wanted me to be called Srikant. The reason is very silly. There was a movie released at that time where the villain's name was Rajnikant and the good man's name was Srikant. So my father, being a virtuous chartered accountant, he said, my son should not have the name of a villain. So even though the name is attractive, he said, no, he will have the name of a good man. But whether the man became good or not is different. What I'm trying to say is, for individuals like you and me, nobody goes and makes application for reservation of name and all that. Why for company? Because two companies should not be incorporated with the same name. It will lead to confusion. Suppose there are two Reliance Industries Limited. Tell me whom, when you're dealing with one company, you'll think you're dealing with another company. Especially if one of these companies is a very big company. So, right from the beginning of company law, there has been a restriction on use of name. There are two things you have to remember. One, not only name, there should not be another company with a identical name. They also see whether similar name also should not be there. Also, same sounding names should not be there. Same sounding names. For example, my consulting company is called Blue Dot. In fact, I feel bad I called it Blue Dot because many people, when I speak over the phone, I say, I'm calling from Blue Dot. They say, you mean the courier company? Like that. Because Blue Dot, sometimes they hear Blue Dot, which is the courier company, Blue Dot. So, such phonetic similarity should also not be there. There's a separate, link in the MCA site where you have to go. The minute this gentleman came to meet me, Mr. Pakyam Pillai, he said, I want to incorporate a company. I said, what name, sir? Pakyam Builders and Developers. Chalo, sit down. I called. Then we went online. In front of him, I have a screen in my cabin. I showed this. Then we typed in the name. So we got list of companies with that name, Pakyam. And then we found out whether any of them are in the same line. Luckily for us, none of these companies had in the same line of business. So he could get it. But suppose another builders had been there, gone. He will not be able to get this name. Okay. Similarly, the name you are proposing should not resemble a trademark owned by a company, whether Indian or foreign. Even a foreign company may have a trademark. Your name should not resemble the trademark. If it is, then the trademark has a registry. There's a trademark registry. The MCA website is linked to that. So you can now go there and search. There's a link. If you type out the name, the bot will search the trademark registry and tell you whether there is any similar trademark also. Everything is online. Beautifully done. Everything is online. Once you clear that, then you have to reserve the name. Then you have to draft and sign memorandum of association. Yeah. When we come to name, I'll deal more about unsuitable names. Okay. Unsuitable name. How to check, is the name similar company already exists? That's what I told you now. When you go to the MCA website, there is a separate link for that. If you go to mca.gov.in, there is a separate link. You click on that link, it will ask you to enter the name of your proposed company. It will do the search and get back to you. It will throw out a list of companies with a similar name. That way, they've done a fantastic job. Try it once. You can do it just like that. That is not charged. It's a free service. You can do it. Yeah, see, Adidas, Adibas, you can't form a company Adibas. But what these people do, while making T-shirt, they will put Adibas. Okay. But that is cheating. That comes under it. They can't incorporate a company. It will be immediately. We'll more about that later. Suppose such a company is incorporated also, Adidas can object. I'll talk about it later. Right now, I just want you to know basics. What is that? First thing, you have to apply for the reservation of name. Before doing that, smartly check it. See to it that such a name is not had by some other company. See to it that such a trademark is also not there anywhere else. If it is such a thing is there, then you have to get NOC from that other company. No objection. For example, we have clients who are having a common logo. They have a common brand. So that common brand name will be there in all the companies they incorporate. So what we do when we incorporate a new company, we'll get NOC from the other companies in the group. Just we have no objection to incorporation of so-and-so company, private limited, whatever, with this name. And we'll file it along with the name application. That's all. Yeah, same field. For example, Naveen builders and developers. Suppose already there's a Naveen constructions also, they will object. Because Naveen builders and developers, Naveen construction, similar. Na? So they may object. They may ask you to get an NOC from the other guy. Like that, many things are there. A lot of things are there. The name topic alone is worthy of 2 hours discussion. So at your level, all you need to know is names are restricted. There's a lot of restriction on names. In fact, when a person comes to me for incorporation of a company, first thing I tell him was name was. If the name is cleared, incorporating a company is pressing of a switch. If all the documents are right, chuck, it goes there. Within 48 hours, I get your company. But name, please be careful. If the name is there not available, if it's resembling some other company, I will ask him to change it. I will ask him to come out with a new name. That's all. What else? We'll try to rework it. Now, after you have done that, you should find out who are all the people who are going to be directors. So their consent should be given. It will be in today, it won't be a signed document. Every director should have a DIN. We'll be seeing that later. Every director should have a director identification number. Only if there's a DIN, you can start the incorporation process. Every director should have a DIN. In fact, these are the 2 challenges in incorporation. See, by the time a promoter comes to me for starting a company, he's in a hurry. So the minute he comes, I tell him, Aram, say, cool down, wait, please drink a cup of water. Cool. It will take 1 month. Why 1 month? I want tomorrow. I would also love to give it tomorrow. First name. Then, how many directors? How many shareholders? A, B, C. Do you have a DIN? DIN, kya hai? So you don't have a DIN now. I have to apply for a DIN, right? That will take care. So once you get the DIN only, you can start. So these are all will delay the duration sometimes, right? See, I'm giving you one small hint as a future professional, whether you are in service or in industry or in practice. Make a promise which you can keep. Do not make a promise which you cannot keep. And once you make a promise, keep it. So don't see, suppose it's going to take you 10 days. You tell your MD very comfortably, sir, 12 days. So that you can finish it in 8 days, you get a good name. Even if you finish it in 10 days, you get a good name. If it's 12 days, still you are on time, yeah? So your reputation is built that way, my dear friend. Over a period of time, when you consistently deliver on due dates or on agreed milestones, you are respected as a professional. And in this incorporation thing, I found when I make a promise and I make it comfortably and I deliver, the client is very happy. Because here's a guy who said, I can't do it only within this time, but he did it. As against a person who says, I'll do it day after tomorrow, and then keeps on delaying till it becomes anywhere 15 days, 1 month. So as well you could have taken 1 month and then finished it in 15 days. You get a good name and go. Think about it. This is nothing to do with company law, but it has a lot to do with being a successful professional, right? So director's consent has to be obtained and it will be uploaded. Along with the DIN, every director will also have a digital signature certificate, DSC, digital signature certificate. Nobody will sign now. See, they will affix the DSC. Digital signature. What happens is the dongle, which you have to insert, then it will ask you for a PIN. That PIN will be generated and given to you. That has to be entered. From the mobile, it has to be entered. It's like an OTP. Once it is entered, it will affix and send. It's a very nice. In fact, going forward, this is going to be the way all of us are going to sign everywhere. Nobody is going to sign. It's going to be like this only. Digital signatures. Then a statutory declaration should be given by the director or by a chartered accountant or a lawyer or a company secretary or a cost accountant that the procedures related to formation of the company have been complied with. Then you have to pay the fees, an amount of stamp duty. Up to 15 lakhs, they allow you to incorporate without fees. Up to 15 lakhs authorized capital. Fees is linked to the authorized capital of the company. Right? We'll see authorized capital in more detail when we come to share capital. But for the time being, anyway, we're going to see it in memorandum. Authorized capital is the amount mentioned in the memorandum of association as the maximum capital that the company can issue. The maximum number of shares that the company can issue, which is mentioned in the memorandum, is called authorized capital. Can you come again, Archie? What are you asking? Sir, please pardon what you tell about the bill right now. Yeah? What is it, madam? Can you elaborate? I'm not able to understand your comment. Okay. I don't able to understand what you are saying. That's all. Please pardon what you tell about the bill now. Bill? What bill? Okay. What if the one member among 5 members leave the company? Then how many members are liable for that 6 months debts? Oh, you're still in 3A. Sai Kulkarni. Okay. Anyway, I'll take the question. One member among 5 members leave. See, once 6 months is over, debts are incurred, then everybody is liable. If one fellow leaves, what you will do? You go and catch the other guys, then they have to collect from him. That's all. Got it? Then how many members are liable? All the 5 are liable. Severally. That means what? That one fellow who has left now, don't worry. You can't catch him now. You are the creditor, right? You sue the remaining 4. Take the money. Then the 4 people have to go catch that guy and take the money from him. His share. That's all. Very logical. No problem. Archiji, I still don't know what you are telling. Kindly clarify. What you tell about it. Okay. Then once fees is paid, everything is done, stamping is done, then you will get what is known as the certificate of incorporation. As in, so happens coincidentally today, I incorporated a company and I handed over the certificate of incorporation. Of course, it was received digitally and it was downloaded and it was also mailed to the client. But still, sentimentally, he wanted a physical copy, so we made it laminated and officially handed over to him in my cabin and all that. People still like these small ceremonies. Then you have to file a declaration about the address of the registered office. All these are done in forms. In company law, you will find forms are there. Should I remember form number? Yes, you have to remember form numbers. Whenever, should you? Yeah. Okay, not me. Should you remember form numbers? Yes. So whenever I'm giving a form number, try to remember it and keep it in your head. Okay. That you write down somewhere. Form numbers and what is the content of the form. If the one member leaves the company before 6 months, wow. Once again, allow me to bend my brain over your question. What if the one member leave the company? So in the first case, you didn't mention this logic. Now you are saying that one person left before the expiry of 6 months. left means what? Sold the share. Then he's not liable because the remaining members, see, the amount is the number is reduced below the statutory minimum. 5 people are there. One fellow knows that it is there. So he leaves the company, right? Only the remaining are continuing without the knowingly. Na? So the guy who left is not continuing knowingly. After 6 months. After 6 months. So that 6 months period is given for these people to go. By going, he has escaped. So to answer your question now, earlier you didn't mention that he left within 6 months. Now that you mention that he is leaving within 6 months, then he is not liable. Okay? Last point about this DSC and Sunday. No. Digital signature certificate is very important. Going forward, documents will not be signed on paper. We will be only signing it online using dongle or digital signatures. Going forward. Of course, you are already there. You are living in a digital world where, most of the things are online. So, digital signatures are going to be there. So, when you, digital signature certificate is a facility by which you can sign online documents. What you need to do is you need to go there. It's okay. It's like an OTP. You just go log in. Then immediately the system will ask you for a randomly generated number. You will insert a dongle. Then the dongle will generate the number and send you an OTP to your mobile. That number you will type. The minute you type that number into the screen, automatically your digital signature will be affixed. Got it? That's the best I can explain for you. Yeah, I will show you the incorporation certificate next class. Sure. I will show you a sample incorporation certificate, etc. next. I wanted to do it today, but I just didn't have the time. I will show you the online set. You can see it. Definitely I will show you. I will erase the name of the company and I will show you the document. Okay. But actually, once a company is incorporated, the incorporation certificate, the memorandum, articles, etc. is a public document. Anybody can go and download it and see it or whatever. It's not a secret document. Actually, you can download it. No, you can take a copy. Whatever. Yeah, public company would also need a certificate of commencement. We'll come to that a little later. Yeah, if the line of business of a company is different, but the name is similar to some, so long as that line of business, there should not be any company. That same line of business, there should not be any other company. That's all. Same name can be there. Even then, see, that's why I'm saying it's a double-edged sword. I mean, it's a double-pronged attack. Yeah. Only name you should not see. That name, that guy might have a trademark also registered. If so, then you cannot. But if only name is there, no trademark is there, and you are getting into a field where he is not there, then you can take that name in that name. Why not? It's a big subject. Over the last 30 years, I have had so many examples and all that. See, every company should have a registered office. We'll be talking about it later when I come to situation clause and registered office in the memorandum. That address of the registered office should be informed to the Register of Companies by a separate form, along with the incorporation documents. At the time of incorporation, you should also inform the Registrar of Companies about the address of the registered office. Every company should have a registered office, official address, where official communications will be sent, where government notice will be sent, where court notice will be sent. That is called registered office. A company may have n number of offices, corporate office, administrative office, blah, blah. But under the Companies Act, it should declare one office as registered office. More about it later when I come to registered office. See, each one of these, is a separate topic. For example, name alone, we are going to discuss in detail. Registered office situation, we are going to discuss in detail. Change of registrar. So when I come there, I'll tell you more about it. Okay. Right now, we need to. For downloading, no need to pay any fees and all that. It's a service available to you as a citizen of this country. You can download. You have to access the ministry website and do it. It's a public website. You can use it. Now, thanks to digitalization, there is no fee for it. To my knowledge, there is no fee for it. Maximum they may charge you $10. There is no fee for that. So we now go into detail. This is the broad thing. Now we go into detail. Right? The following, what I'm going to do is at 7:30, I'm going to give you and me a break. The next 10 minutes I'll go on. Then at 7:30, I will give you all a small break, 10 minutes ka break. Then again we'll go on till 8:30, which will be the standard practice, inshallah, going forward. 7:30 ka break, then 10 minutes, then come back with renewed vigor. We'll go on till 8:30. The following documents and information are required to be filed with the registrar, within whose jurisdiction the registered office of the company is proposed to be situated. Now, a quick word about registrar. This guy is the official face of the Ministry of Corporate Affairs. He is the guy who meets public. Behind him, there's a whole battalion of people who are above him. The registrar is at the lowest end of the hierarchy. Above him, you have the regional director. Above him, you have assistant director. You have, deputy directors, additional directors, director. Delhi May. So these are bigger. The registrar is the lowest, but he is the public face. Everybody meets him. He has a big office in wherever. In those days, we used to go and meet him. Today, with more and more online, there is no reason to meet this gentleman. Usually a gentleman, sometimes a lady also. That person is called Registrar of Companies. Registrar of Companies. Abbreviation ROC. If you see an abbreviation ROC, it means Registrar of Companies. Technically, it's the Registrar of Companies who registers the company. Though, of course, today you will find, when I show you the incorporation certificate, you will find somebody sitting in Manesar in Gurgaon has signed it. But jurisdiction, what do you mean by jurisdiction? Locality will be governed by where you are situated. You will decide who is your registrar. Okay. So India is divided into 5 regions. Each region has a regional director. Each state has 1 or 2 registrars. For example, Tamil Nadu has, Tamil Nadu has, give me 1 minute. Some problem is there. I will address it. I'll just share again. Hope that things will be fine. Okay. Just give me 1 minute. I'm sorry. In the meantime, if you have questions. Shall we give break? Yeah. We will have a small break. Now the time is 7:23. We'll have a break till 7:35. 7:35 we will start. Thank you. Welcome back from your well-deserved break. I see in the query pad a message from my student from an earlier batch, Pooja ji. She just wants my blessings. Definitely it is there, Jai Shri Krishna. So you will clear the exam very well, madam. And everybody else who's proposing to write the exam, if you're listening in or whatever, let me, as a teacher, bless you. And of course, your hard work will ensure that you clear the exam. Wonderful. Now, quickly let us cover this theory part. This is only an elaboration of what we saw in the list of, shall we say, procedure. So, documents you have to file are Memorandum of Association, Articles of Association. We will see the Memorandum of Association and Articles in detail in the ensuing 3 sessions. I will take the memorandum and split it and show you. There are 6 clauses in the memorandum. Each clause I will analyze. Name clause, capital clause, object clause, situation clause, subscription clause, everything, liability clause, everything will be covered in detail. Okay? So right now, just think it's a charter document. It is the document that's like the charter of the company, like the Constitution of India brought the Republic of India into existence. The Memorandum of Association brings the company into existence. The Articles of Association is nothing but the rules and regulations that govern the company. Then this declaration is in form number INC.8. INC 8. You can easily remember form numbers if you remember the title of the chapter. This chapter is called Incorporation of Companies and matters incidental thereto. INC is incorporation. Therefore, all the forms associated with this chapter will have INC. The numbers will be there sequentially. So this is INC.8. This is the format of the declaration to be given by, as I told you, advocate, chartered accountant, caste accountant, company secretary in practice, or a person named in the articles as a director, manager, or secretary of the company. That all the requirements of this act and the rules made thereunder in respect of registration and matters precedent, that is coming before, matters to be done before, matters precedent. For example, ensuring that the name is correct, ensuring that the name is not resembling and all. Matters precedent and incidental thereto, connected with it, have been complied with. Right? So, this declaration is very important because if a person gives a false declaration here, he can be penalized. You see that. Giving a false declaration, he will get penalized. He'll be punished. Also, a declaration from each of the subscribers to the memorandum. That is, those people who have agreed to become members of the company. They are signing the memorandum. They are called signatories to the memorandum. Today, they don't physically sign. Their digital signature is affixed. But they are called subscribers. Okay. So, we get a declaration from the subscribers and from persons named as the first directors that he is not convicted of any offense in connection with the promotion, formation or management of any company. He has not been found guilty of any fraud or misfeasance. Fraud, you know what it means. Misfeasance means not doing something that he is supposed to do. Okay? Failure to perform his duty, breach of duty to any company. Okay? So the idea is we are taking a declaration from him saying, I am good man. I am not convicted. Okay? All the documents filed with the registrar contain information that is correct and complete and true. And also the address to our correspondence till its registered office is established. All that will be okay. Now, as my good friend Vikas Bansal asked, didn't the company declare the registered office address before getting the COI? No, it will. No need. Within 30 days, you can inform. See here, in this case, in this point, you will only tell the address for correspondence. Then once the registered office is established within 30 days, you have to inform. That is why that's a separate step in the formation. You have 30 days to do it. After all, you can't start, you might want to think about it. You have to enter into a lease agreement with the landlord. You can't enter into a lease agreement until the company comes into existence. You can't, until you enter into a lease agreement, you don't have an office. So, what to do? So, somewhere they say, chalo, you give some address and you go. Then, once you are incorporated, get a registered office and inform us within 30 days. Okay. Yeah. Misfeasance means misconduct. Actually, misfeasance means doing the right thing wrongly. Means you are supposed to deduct TDS and you are supposed to make the payment. Suppose you make the payment without deducting TDS. That is a misfeasance. You are actually not dishonest. Your intention is not to cheat anybody. But statutorily, you are violating the law. It's called misfeasance. Thereby, you are causing loss to the company. Malfeasance is also there. Not coming here. Later on, you will find that word malfeasance. That is doing the wrong thing, but rightly. So, criminal activities, where your intention is to cheat, but you do it in such a way that everything looks nice. For procedures are complied with, but that is called malfeasance. That's why my guru used to say, misfeasance means doing the right thing wrongly. Good people, but they don't know the law, they violate it, they get into trouble. Malfeasance is where you do the wrong things rightly. You see, the fellows who are fraud now, they will comply with everything. They will comply with the rule because the fraud is more important. Now they don't want to get caught here. Is the point. Okay. The directors whose name is mentioned in the articles are the first directors. The directors whose name is mentioned in the articles are called the first directors. After that, the company can appoint any number of people as directors. That is called, they are also directors. But first director means those people whose name is mentioned in the articles. This first directors will be relevant for you when you come to final directors topic. Okay. Basically, first directors means those people whose name is mentioned in the articles as the directors of the company. The particulars of the names of every subscriber, that will be given in the memorandum itself. Okay. Also, the particulars of the name, surname, etc. of the directors and the DIN. For a director, DIN is needed. For a shareholder, simpliciter, sirf shareholder, then no need for DIN. But director, then you need a DIN. Okay. And the particulars of the interests of the persons mentioned in the articles as the first director in other firms or bodies corporate. And along with their consent to act as directors. Okay, so the directors who are named now, they should give their consent. Also, they should give a list of companies or firms or bodies corporate where they are already directors. Okay, where they are having interest, shareholder, director. So the idea is simple. They are protecting a future investor. See, once you go to the website of the MCA, you go to this company, you will see the name of the directors. Then you will see this director is interested, having interest in all these companies. There you find Dubakur Limited. This fellow is the MD of Dubakur Limited and he's also a director here. Better I avoid this company. So the idea is to protect the investor. Got it? By giving him information. See, we can only give you information. Once you decide to still go and make an ass of yourself, nobody can prevent you. But all the information is given to you to say that don't do this. But still you say, I will do it. Nobody can prevent it. This question don't ask now. If there is no director at the time of incorporation, not for intermediate. This question is a final question. Wait till you complete intermediate, come to final, I will answer it for you. If I answer this question, I will be wasting your time. Okay, for your information, the subscribers to the memorandum who are individuals will become directors. That's all. Suppose the subscribers have not mentioned the first directors, right? Since you are asking, I am answering. It's not relevant for your syllabus, but I am answering. If the first directors are not mentioned in the articles by the subscribers to the memorandum, the members, then the members, the subscribers to the memorandum, the first members, they will be deemed to be directors. Who are individuals will be deemed to be directors. Okay. Now, don't see, students love to ask questions which are unanswerable. For example, they will ask, sir, only individuals can be directors. Suppose in that memorandum, company is there, what happens? Company cannot be a director. Suppose two companies are there and no individuals, what happens? Such a company will not be allowed to be incorporated by the ROC. The registrar of companies will not permit such a company to be incorporated. That is why the registrar is there. If you try to do that, he will stop. He will say, mention two directors, first directors, or include a subscriber who is an individual. Otherwise, he won't incorporate the company for you. Answer is straight, simple answer. Okay. Hypothetically, you can ask n number of questions, but practically it's not going to happen. Got it? You got the answer for your question, Poonamji? But it's a good question because later on in your final syllabus, you will have to, this question will be asked. But too early you're asking the question. I hope you will remember the answer at that time. Don't worry, we will teach you again. Okay. The Ministry of Corporate Affairs has invented something. See, I don't know, the MCA loves acronyms. Means they love to take, first letters of words and make them into, words. This is there, not only the current government likes to do that. They like to make these, acronyms. So here is an acronym for you called SPICE. What is SPICE? Not ordinary SPICE, SPICE Plus. What is that SPICE Plus? Simplified pro forma for incorporating company electronically. Okay, I'm not making fun. SPICE Plus is a beautiful form. It's a single point solution for a person. Suppose an entrepreneur wants to start a company, SPICE Plus is enough. Part A, name it. He can apply for the name directly. For DIN also he can apply. Up to 3 directors, he can apply for the director identification number in SPICE itself. SPICE Plus itself. No separate application. And part 2, he will attach all the documents for incorporation. Along with that, he can also apply for PAN. He can apply for TAN, tax deduction account number. He can also apply for GSTIN. He can apply for other, professional tax registration, blah, blah, everything in one shot he can get. Beautiful form, SPICE Plus, part 1, part 2, and part 2. But in our experience, we don't go for GSTIN through SPICE Plus, part B, for a reason. It takes long time because 2 different departments are involved. It takes a long time. So the guy is in a hurry, we don't. But minimum, the company will be born with a PAN and a TAN. At the time of birth of the company, I'll have a PAN and a TAN straight away, it will come. The IT department allotted PAN and TAN will be part of the incorporation certificate. Fantastic. That way, the MCA has done a fantastic job in terms of SPICE Plus. It's a nice form. Everything is in that single form. You just fill, you'll get. Then you can go open your bank account and go. Okay. First member and first director, no, madam. There are 2 different. The first members are people who will sign the memorandum and agree to take the share. They are the member. Director is a person who need not be a member. He need not hold shares. He will be responsible for management. Okay, Absolutely correct. Sitting at home, yeah, you don't need a chartered accountant or company secretary. Also technically, but not a good idea because many things they won't know how to do it. So, but yeah, theoretically, a gentleman or lady sitting at home can electronically incorporate a company with SPICE Plus. Yes, theoretically, yes. But practically, again, they get into deep shit and then they come to us. Their name is rejected. So many things happen. So better to come to a member of the Institute of Chartered Accountants of India or a company secretary. Be properly advised and do it. My humble request. So incorporation of a company happens on issue of the certificate of registration. Once all these documents are filed with the registrar, then the registrar shall register, means take on record. Register means to take on record. Officially, it will become record of the registrar. And then he will issue a certificate of incorporation, which I will show in the next class. On Tuesday, I will show you the form. I will scan it and I will show it. Then once the company is incorporated, it will get a SIN, not SIN, SIN. No, CIN. But it's pronounced as SIN, actually. I don't know why. C is pronounced soft as S, sir. So SIN. I think it is a SIN. Allotment of corporate identity number. SIN. SIN is a unique number identity for each company. So allotment on and from the date mentioned in the SIN, the certificate of incorporation, the registrar shall allot the SIN. See, the company comes into existence on the date mentioned in the certificate of incorporation. Actually, this is a very, very important legal point. The certificate of incorporation is a conclusive evidence that all the procedures connected with the formation of the company have been complied with. And the company comes into existence on the date mentioned in the certificate of incorporation. Right? And all the documents, etc., should be maintained and preserved by the company at its registered office till its dissolution. Means till it finally wind up and died. The legal death. That comes in final. So in the final exam, you will get it. Okay. Beautiful. Professional sign is not required for incorporation of a company anywhere. Earlier, what I used to do was I used to sign as a witness in those days. Now that is not needed. So I don't. Earlier, up to 1,000 companies which I incorporated, you will find I will be the witness. But I became very busy and I couldn't just do it. So I stopped doing it for many reasons. And I'm not even a witness I sign. They bring their own witness and they sign it. Okay. So no need. No need for a professional signature. No need for professionals here. No more jobs for me. I'm out of job. It's all computerized now. No practicing chartered accountant, no job. Lot of jobs are there. Public cannot do many things. They all, with all the computerization, these Buddhas will have a lot of problems. Hey, come on, they don't know anything. Definitely they'll need a support. Don't worry. Okay. Technically, yes, they can go and do whatever they want online. All these IT fellows, they think everything they can do online and all. They'll go get themselves into deep shit. And then they'll come to me and say, Mr. Srikanth, this is what happened, that is what happened. I said, scrap everything that you did, start afresh, and I will form a company for you. Okay, first thing, whatever you did, I cannot repair. Close it. Withdraw your application. Come. I will fresh again and do it. Don't come and waste my time with your existing activity. I'm sorry, I sound a little too arrogant now, but what to do, you tell me. Especially these techies, as they call themselves. It's very funny to see them, get into deep shit. Okay. Is it compulsory? Promoter is a shareholder? No need. Promoter need not be a shareholder. Promoter need not be a director. Definition of promoter, you see. Even a person whose instruction I am obeying he may not be a director, he may not be a shareholder. He's a promoter. Okay. Yeah, the incorporation certificate will have a SIN. I will show you the incorporation certificate next class, you will understand. That incorporation certificate will have a SIN, will have a PAN, everything. Okay. So on and from that date. So along with the certificate incorporation, you will be given a SIN, certificate company identification number. Immediately. Along with it. Okay. Filing false information during incorporation process. Right? See, we are asking you for a declaration. Every stage we are asking, please tell it's correct. Please tell. Think. In spite of that, if somebody does fraudulent information, then the punishment is very, very strict. Can a shareholder become a director? Yes, why not? How? By the shareholders have to appoint him as a director. That's all. Not a big thing. Majority of the shareholders appoint him, then he's a director. Once the company his name is mentioned as first director, no problem. Thereafter, company is incorporated. If the company is incorporated, how the director will be appointed? Either by the board under certain circumstances or by the shareholders. So if the shareholders appoint, you can be a director. Yes, why not? Shareholder definitely can become a director. Even a non-shareholder can become a director. If the shareholders appoint him, majority of the shareholders appoint him. Okay. See, you should, I think you're not clear. Shareholder alag hai, director alag hai. Shareholder owner. He takes all the decisions. Shareholder, who is to be a director, I take the decision. Majority of shareholders are appoint director. Once the director is appointed, director is involved in the day-to-day management of the company. Shareholder cannot come and interfere in the day-to-day management. It's clear demarcation, which is why Companies Act. So many duties are there on the directors to ensure that information is given to the members. Right? Protection of investor. Consequence of filing. Furnishing of false or incorrect particulars of information or knowingly suppressing material information at the time of incorporation. Or company already incorporated, furnishing any false or incorrect information or by suppressing any material fact post-incorporation, both during the incorporation process or post-incorporation. Then every person filing such information during the incorporation process, because at the time of incorporation, there is no director, shareholder, promoter. So every person who is furnishing such information is liable. In case of already incorporated company, then the promoters, the persons named as the first directors of the company, and the persons making the declaration, all of them will get caught. But do you notice one thing? Once the company comes into existence, shareholders are not liable unless they make a false declaration. Whereas promoters and first directors become liable. Directors are liable for false, furnishing false. Whereas shareholders, no. Unless he knowingly makes a false declaration. Otherwise, shareholder can always say, I'm not, there's no way I'm connected. It's the director who's running the business. I'm only the shareholder. Okay. This is very, very important for you to understand, my dear friends. The difference, the dichotomy, shall we say, the segregation between the powers of a director, duties of a director versus powers of a shareholder, duties of a shareholder. In case false information is furnished at any stage by these people, then they'll be liable for action for fraud under section 447. Don't worry, 447 is not in your syllabus, agreed. But I will talk about 447 when I come to prospectus. When misstatement is there and prospectus also, there is a punishment under 447. So we will see 447 when we come to prospectus. It's a huge penalty. 10 lakhs, crore, 1 crore, 10, all that huge amount. It's punitive, 447. Okay, so we'll see 447 detail in prospectus. Right? See, if the false information is filed with the registrar during the incorporation process, the first director is liable to, and if he is more director of that company, is no more director of that company, still, wait a minute, be careful. What information, who furnishes? Whoever furnishes that information is liable. During the process of information, so much information is being given. Now, suppose they are including my name as the first director. I have not given my consent. How I can become liable? Yeah, you understand? Only if I give my consent, right? And I have furnished false information, I will be liable during incorporation. Post-incorporation, even if I am not involved, I will be liable. But pre-incorporation, during process, if I have not given my consent, how I am liable? I never even give. He is including my name, yeah. Merely because my name is mentioned as first director, how I will become liable? Okay. But if I have furnished a false information, then I will be liable. Right? These are all small things. Do you notice that? And most of it doesn't need any knowledge of company law. It's only logic. Have you ever thought about it? A person who is able to think logically, most information and knowledge is available to her. It's only when, we are not willing to use logic. We want everything in book, rule, 1, 2, 3. We are not able to create things from this. We want things to be written and shown to us. Then only I'll agree. No need. Many things are not in the act, we have to create it and go. In fact, Income Tax Department, I have given opinion saying, this is not in the section, but this can be done by you. And one additional commissioner, he took that opinion and he gave me a certificate, which I'm telling you. So logically, I said, why can't you give? I interpreted 197 or 195 and I said, sir, this is what it is. He agreed. So your smartness as a professional is not in knowing the law or confused by the law, but in going beyond the law and understanding the base of the law and then using that logic knowledge to understand the law, right? Yes, only after the incorporation, direct liable. Then you can't say, I didn't know, Baba. You are there, you gave your consent, became director now, then it is a duty to be aware of it. You cannot say, I didn't know. Whereas shareholders can. Got it? Moving on. Consequence of filing false information. What are the orders that the tribunal may pass? Where the company is already incorporated by furnishing any false or incorrect information or representation, or by suppressing any material fact, or by any fraudulent action post incorporation. See, think about it. The company has been incorporated by giving false or incorrect information. Now, such a company should not be allowed to exist, right? Why can't the tribunal simply, wind up that company or dissolve that company? No, because it has come through a process of law. You cannot simply, the ROC cannot say incorporation certificate is not valid, tear it and throw it. No. Once the certificate of incorporation is issued, a company has come into existence. It can be killed only by a process of law. The ROC cannot say all false information are provided. I'm not satisfied. I will tear that certificate of incorporation, throw it and cancel it. No, not possible. So he will have to file an application to the tribunal. And he has to inform, this company has done like this and I have incorporated the company, what to do. Then the tribunal will pass suitable orders for regulation of the management of the company in public interest or in the interest of the company and its members and creditors, including making changes in MOE or AOE. See, it could be that the false information was given by a few people. They can be removed. The remaining people who are genuine can be continuing. All that can be done by the tribunal. But once it is shown that there is a false or incorrect information, then the registrar should appraise the tribunal and the tribunal will pass such orders like this. In addition to penalty, this is in addition to penalty, right? They can direct that liability of the members shall be unlimited. So you don't get the benefit of limited liability. Sorry, okay? Or direct the removal of the name of the company from the register. This is different from cancellation. ROC cannot do this, but the tribunal can pass an order. Then the ROC can do it. Or in the meantime, if the company has borrowed money, acquired assets, etc., they can pass an order for winding up. Because if the assets are there, creditors are there, assets are to be sold, creditors are to be paid, all that has to be done through winding up. So winding up can also commence. Pass such orders, other orders as it may deem fit, right? So this is the consequence of filing false information. So in all this, the company shall be given a reasonable opportunity of being heard, right? Obviously, in a country like India, we still call ourselves a democratic country. Therefore, every individual citizen, before action is taken against him, including a company which is a citizen, should be given a reasonable opportunity of being heard. My point of view is there, yeah. Please listen to me. Don't straight away kill me. Give me one chance to tell what my view is. Maybe wrong, but listen. Okay? This is a very important principle of natural justice. The tribunal shall take into consideration the transactions entered into by the company. See, in the meantime, the company could have borrowed money, acquired assets, hired employees, entered into contracts. All that will have to be taken into account. Yeah. In the remaining portion of today's session, I'm going to cover OPC. OPC means one-person company. If the company gives valid reasons, what will be the scenario? That's all. No punishment. That's all. Everybody enjoy. Go. I mean, see, your situation will happen if the facts given are correct. Genuinely they have given. Some small discrepancies are there. This has been shall we say, represented by the ROC and to the tribunal and all. So now we are going and saying, sir, genuinely I know, sir, I didn't know that this fellow's name is Ramaswamy, I put Kuppuswamy. Now I've corrected it, sir. It's a mistake only, but what to do? Like that, if you say, okay, inadvertent, genuine, he didn't intentional, there was no fraud involved here. So things will go on, company will become normally running. That's all. Okay. When a professional applies for incorporation certificate, it falls into which can be verified. Yeah, why not? Why not? Professional. In fact, in addition to that, he can also be, by professional, I suppose you mean a chartered accountant. He can also be proceeded. Once he is convicted under 447, he may also lose his membership to the institute. Okay. Removal of name and winding up, alag alag hai. Obviously, that's why they're coming in two separate columns. At this stage in your studies, don't bother about that. This is an advanced level concept which will come only in final. Currently, you understand one thing. Removal of the name means the name will be removed from the register of companies. That's all. There will be no selling of assets, paying of creditors. That can be done only if the company was incorporated, nothing has happened. Balance sheet, zero. No asset, no liability, only capital. Even capital may not be bought in. At this stage, I can remove the name of the company. But if the company has acquired one asset, borrowed money, you cannot remove the name. You have to pass an order for winding up. The OL, the liquidator will come. He will sell the asset, pay the creditor, then inform the tribunal. Tribunal will pass an order for dissolution. Then the name will be struck off. The process is winding up is a process, whereas removal of name, immediate. Okay. Depends on the situation. Logic. When I can remove the name, only if there's no transaction, nothing, I can. But if some transactions are there, winding up. Why not? So long as they are not contradictory to each other, they can give n number of orders. Okay. Any of these orders, you can pass. Combined also. No. But obviously, if it's going to pass an order for removal, they may not pass orders for continuing. See, you should. The tribunal should be careful while doing such things. This question I will not answer, Rekhaji. You go and talk to the institute. Need not do C and once his name is removed, known, there will be some conditions about it. Then once he is satisfying, he can. He need not write the exam done again. Don't do it. Restitution of name, he need not write exam. Don't do it. Now we go to one-person company, OPC. Quickly. As of 31st December 2020, I have not updated it. I don't think MCA has also not updated it. As of 31/12/2020, there were 34,235 one-person companies out of 1.3 million active companies. Okay, 13 lakh active companies. We had 34,235, almost 3%. It's quite huge. 3% of the companies are OPC. Why would somebody want to form an OPC? They just want to have the separate legal entityship, limited liability, but they don't want any outsiders to come in. They're not going to go for funding. They're just going to run the company and make money. It's just a vehicle. It's a vehicle for running a business, right? That's called OPC. OPC is not new to India. It is pretty recent. Whereas in Singapore, Australia, US, it is already there. OPC is Singapore, you can form an OPC. Hong Kong, Australia, New Zealand, US, you can form a OPC. One-person company. Rules are very simple. One-person company means a company which has only one person as a member. Of course, one director will be there. Same member can be a director. Member can be the director also. Or it can be a separate person. But only one person should be a member. You can have more than one director, but only one member. The memorandum of articles or memorandum of association of an OPC shall indicate the name of the other person who shall, in the event of the subscriber's death or his incapacity to contract, become the member of the company. This is what somebody was talking about when they said nominee. At the time of forming an OPC, you should indicate a person who is a nominee. In the event of the subscriber's death or incapacity, means becoming like me, a lunatic or something else, then who will run the company? The nominee will run the company. Okay. So the prior written consent of such person in form number INC3 shall also be filed with the ROC at the time of incorporation of the one-person company. In case you've already been taught this in your definition part, no problem. But if you don't know it, know it. So INC3 should be filed giving the name of that consent of the other person at the time of incorporation of the OPC. See, incorporation of OPC is similar to any other company, INC7 and all. In addition to that, OPC should also give form number INC3, giving the name of the nominee and the written consent of the nominee, right? You can't just put somebody's name as nominee, right? Thank you, Mr. Joshi, for your kind words. Correct. This is a good question. Jayendra Kumar is asking, any real example? None. Till date, none. There is no example. It is there in the Act, but till date, tribunal has not passed such order. No such company where they have given unlimited liability and all that to a company. No. Okay. Wonderful. So, important points to remember. OPC will have only one member. Same person can be a director. It can have any other person also as director. More than one director possible, but only one member. Also, the OPC should indicate name of another person who will, in the event of subscriber's death or incapacity, will become the member of the company. Okay. His consent or her consent should be obtained in form number INC3. Such other person may at any time withdraw his consent by giving a notice in writing to such sole member and to the OPC. Now, the member of a OPC may at any time change the name of such other person by giving notice. Okay. So, they can also withdraw. The member of the OPC can also change. Right. Merely changing the name of that person, who is the nominee, will not be an alteration of the memorandum. It will just be a decision. Very, very important. Possibly most important point from Indian perspective is the member of an OPC should be a natural person. Even the nominee should be a natural person. Member or nominee should be a natural person, means human being. Company cannot be a member of an OPC nominee. Artificial person cannot be. Should be a natural person who is an Indian citizen, whether resident in India or otherwise. Note the difference. Somebody may stay in India for more than 182 days. They are resident. They may not be a citizen. Somebody may be a citizen, means holding Indian passport, but not staying in India for more than 182 days. He might be in US. He is an Indian citizen. So OPC can be formed only by Indian citizen, but he may be a non-resident. Actually, most OPCs are formed by US citizens. Indians who are in US, they are not yet US citizen. Still they are Indian citizen, green card holder, blah, blah, whatever. They will want to form an OPC. I don't know why they want to form OPC. Summa, they will say, I'm going to form an OPC. What they will do with the OPC, God only knows. Most of these OPCs are not run at all. They become waste. They'll come to me and say, I want to form an OPC. Form. I'm told that in India we have introduced OPC. I want to form an OPC. Go form. You pay me the fee, form it, enjoy, take it. No, that's all. But what you do with it? Nothing. I don't know what to do. Most of these techie people who are sitting in US, they do it. Thinking that, each fellow dreams that he is the next to Facebook or he is the next to Google. Every fellow has a dream that he is the next to Facebook or next to Google. So first thing they'll do, form an OPC and keep it. I don't know for what purpose. Nothing happens after that. In fact, the minute I incorporate itself, I tell my team also, hey, this guy won't come. Don't include him in our client list. Simply incorporate, charge him a fat fee, send him off. That's all. Okay, for the record, I don't have any OPC clients. Not even one OPC. I've incorporated a lot of OPCs. But OPC client I don't have. They don't come because they don't come. They don't run any business. They are all fellows who are working abroad, dreaming that they will become the next Facebook or they will become the next Google, thinking that if they form the company, they will get a valuation. Poor fellows. Anyway, for the purpose of this rule, okay, the term resident in India means the person who has stayed in India for a period of not less than 120 days during the immediately preceding financial year. But again, I don't see why they're giving this, because he need not be a resident. So long as he's an Indian citizen, he can be a member of an OPC or a nominee in a OPC. Did you note it? Yes, no such restriction on director. Only one member, only one. Director, who also can have? Thank you, sir. Thank you. Thank you very much. Jayendra Kumar. Okay. Natural person shall not be a member of more than one OPC at any point of time. And the said person shall not be a nominee of more than one OPC. So, one OPC can have only one member. One person can be a member of only one OPC. Again, one person can be a nominee of only one OPC. He cannot be a nominee of more than one OPC, cannot be a member of more than one OPC. Suppose natural person is a member of one OPC, becomes a member in another by virtue of his being a nominee in that OPC. Example. Abhay forms an OPC. In which nominee is Varun. Varun also has an OPC in his own name. Varun OPC, somebody else is the nominee. Don't worry about that. But in Abhay ka OPC, Varun is the nominee. Unfortunately, Abhayji passes away or becomes lunatic. Whatever happens. Now, Varun will become the member of Abhay OPC. Why? Because by virtue of his being a nominee of Abhay ka OPC. Got it? Now, he is also a member of his OPC now. Okay? Then he cannot be a member in more than one OPC. Therefore, such person shall meet eligibility criteria within a period of 182 days. Means what? He is given 182 days to select whether he will be a member in Abhay or whether he will be a member in Varun. Obviously, he will prefer Varun now. So, he should appoint or close that OPC so that he will be only in one OPC. Right? No minor shall become a member or nominee of the OPC or can hold share with beneficial interest. Minor cannot become a member or nominee. Right? See, all these could come as questions in the exam. They could test your knowledge of natural person. What happens if the OPC, one man dies and same person becomes member in two companies? Within 182 days, they have to meet the eligibility criteria. They can be a member only in one OPC. Right? An OPC cannot be incorporated or converted into a company under Section 8. Section 8 company, we will see in the next class. Next class, we will see Section 8 company. What is Section 8? So, it may be converted to private or public companies in certain cases. We will see that also. Conversion of a OPC into a private or a public company. Similarly, such OPC cannot carry on non-banking, financial or investment activities. Okay? No. They cannot accept deposits. They cannot lend money. They cannot invest in securities, etc. of any other body corporate. Means they cannot be an investment company. But the own funds of that company can be invested. But they cannot become an investment company where 50% or more of their income is coming from investments. Such things cannot be. Okay? Actually, my memory is that up to 15 directors OPC can have, technically. Because that is a maximum ceiling on number of directors. Minimum for a private company is 2, public company 3. Right? OPC comes technically under private. Right? That is minimum. But maximum is 15 for all companies. OPC also 15. This is my understanding. Again, not in your current syllabus. Since you asked the question, I am answering. Yeah. More about Section 8 company in the next class. Don't ask any question on Section 8 company now. I'll come there in detail with Good. Thank you for giving me this information. Section 8 company is related for companies whose aim is not to earn profit. I'll talk about it. First thing I'll talk in my class next time is this comment you have given. Section 8 companies for companies whose aim is not to earn profit. I'll talk about it later. See, I'll check out and I'll get back to you next class, Shrestha. Whether it's 180 or 182. I'll just check out. Okay? Next class, I will answer your question. This is whether this is, which is 180? This one, no? I will check up at it. Institute material will be right. If so, that is why I said, I will not give my material now. I will correct it and I will do it. Okay? Or else I will check. Right? 180 or 182, I will tell you. Next class, I will. At this stage, don't bother. Next class, I will clarify it. Now, I don't want to waste your time rushing to the thing. We have only 10 more minutes. Let me see if I can complete it today. Okay. See, there is an amendment to the rules. Rule 3, sub-rule 7 of the Incorporation rules, which deals with OPC, has been removed. This rule, which I am now showing on the screen, has been removed. Right? Rule 6 and 7 deal with conversion of OPC into private and private into OPC. These rules have also been consequently amended. Our institute material gives the correct law. Agreed. If it is 180 days, you are right. We see how to verify. Allow me to do this. See, I am now showing you the website of the Ministry of Corporate Affairs. See if I have the time to do it. Why I am saying now, when there is a doubt, I prefer to go to the Ministry website and check the Act. So I go to the website, see the Act, and I just go to the rules. Therein you will find all the rules are there. So I will select the Incorporation rules. Companies Incorporation rules. Therein, to my knowledge, 3 is one-person company. Let me see. So this is the rule here. I'm showing you the rule itself, the actual rule. Where a natural person becomes a member in absolutely 180 days. I'm sorry, my mistake. But did you notice one thing? I did not only rely on the institute material. I have gone to the original source. I have gone to the original source, which is the rule. The official source for it is not a textbook or any other notes, etc., but the bare act, the rules. I have shown you how to go there. See, all you need to do is you need to go to MCA. Can you see here? mca.gov.in. Make a note. mca.gov.in. Once you go there, you'll get all this. You can go there. I thought I would share with you this because once I show a student all this, then you are not only. So I'm going to change it now to 180. I don't know how it became 182. Maybe because I am more hooked into the income tax number, right? So maybe my mistake. Maaf kar dijiye. So 180 is fantastic. But what I was also trying to demonstrate to you as a future member of our institute is, do not rely on other people. Do your own research with the original material. Okay. I know most of you come from collegiate backgrounds where you are used to using textbooks. Agreed. But once you get into CA, you might want to use the other sources, original sources also, like Bear Act. Think about it. If you can do that, it will be good. If at the intermediate level you pick it up, no, final level it will be easier. It will be far easier to do it at the final level. But if at intermediate level you are just mugging up from books and all, not knowing the original source, then in final level suddenly when they ramp up the the level, you will find it very difficult. Okay. So thank you for that correction. And the confident way, Vandana Chaudhary was like, it is 180 days, sir. I like that. Okay. See, I gave the example now. Abhay is already having a OPC. Varun is also having an OPC. In Abhay's OPC, Varun is a nominee. That is, his name is mentioned as a nominee. Varun. Now Abhay dies. Now what will happen? Once Abhay dies, Varun will become in the event of the death, then the nominee will become the member of the OPC. Correct. So Varun will become the member of the OPC. Now what they say, Varun cannot be, or an individual shall not be a member of more than one OPC at any point of time. So on the death of Abhay, automatically Varun will become a member by virtue of his being a nominee. Now, immediately you cannot say you are violating. So they are saying, we will give you 180 days, as you rightly point out, 180 days. Within that 180 days, do something. Sell the share to somebody else, make him the OPC member, you get out. Or close the OPC itself, wind it up, close it. Do something so that you will not be in more than one OPC. Okay. For that, a period of 180 days is given comfortably for him to take a call. Which OPC is going to be a member and close or come out of the other OPC. Got it? For that, a time period of 180 days has been given. Are we clear? Fantastic. Now, I was honestly thinking I will cover this 2 slides and then go to section 8. But I think we don't have time today. Anyway, I will see. I don't want to rush. See, out of enthusiasm, a person formed, okay, this slide, ignore it. All I am trying to say here is 3.7 has been amended. Actually, 3.7 has been removed. No 3.7 now. Because 3.7 has been removed, there is no, shall we say, condition and all. Paid up capital, turnover conditions are not there. So, any OPC can convert into a private company or a public company. Okay. Technically, OPC will come under the category of private. It is not a public company. But it is still a one-person company, right? If you want to have more shareholders, etc., then you have to become a private company. If you want to go to the public for subscription of shares, you have to become a public company. So, first of all, the OPC shall alter its memorandum of association and articles of association. It has to pass a special resolution and give effect to the conversion and make necessary changes. Okay. Now, the minimum number of members and directors shall be increased. The minimum number, I told you now, minimum number for a private company is 2 directors. Minimum number for a public company is 3 directors. Minimum. And the minimum number of members for a private company is 2, 7 for a public. So you have to increase the number. Minimum paid up capital requirements, if any, shall be maintained in case it's not there. All this is to be done. Then you have to give an application in form INC 6, providing the altered memorandum of association and articles, copy of resolution, list of proposed members and directors along with consent, list of creditors, in case the OPC has creditors, list of creditors, and the latest audited balance sheet and P&L. If all this is filed, once the ROC is satisfied, okay, then the MCA will, the ROC, that is the MCA ROC, will approve the conversion and a fresh certificate of incorporation will be issued with the name private limited after the name of the company. It will no longer be a one-person company. Right? This is conversion of OPC into private. Now, a private company wants to become OPC. Public company cannot become OPC. Public company cannot become OPC. Private company can become OPC. Okay? Section 8 company cannot become OPC. OPC cannot become Section 8 company. Section 8 company cannot become OPC. Public company cannot become OPC. Private company can become OPC. You have to pass a special resolution in the general meeting. No objection should be obtained from members and creditors. Then you have to again make an application in INC 6, giving all the declaration, etc., list of members, etc., and fine. Obviously, you will buy the shares out from all the other members because you can't have more than one member now, right? So everything will be taken out by one man, and he will become the one single shareholder of the OPC. And you should also satisfy other requirements. Okay. Now, once everything is filed with the ROC, within 30 days from the date of passing of the resolution in form number MGT 14. MGT 14 we'll see when we come to management and administration. It's nothing but whenever you pass a special resolution, you have to file form MGT 14 within 30 days. Once everything is satisfied, then the ROC will issue the fresh certificate of incorporation as an OPC. Now, private certificate of incorporation will be cancelled and fresh certificate will be given as a OPC. Fantastic. This is not relevant now. I'm not going to waste your time with this. In the next class, we will talk about Section 8 companies. Right? Okay. In the next class, we will talk about Section 8 companies. Till we meet on Tuesday evening at 6 p.m. I wish you all the very best. Have a great evening ahead. Bye. Yes, sir.